Hello everybody and welcome to the US session brief. We're on Wednesday the 12th of April 2023. We had the US CPI release just under 20 minutes ago and you've seen the initial market reaction on my screens and on my charts here, and that's been a sell of the US dollar. It's given gold a boost. It's been a buy of risk assets including equities. It's a nice 40-point move up, albeit that's on its way to potentially being faded back down. Why is that? Because we've had US CPI come through as expected. In fact, the headline number came through 0.1 percentage point underneath the expectations. Core came in as expected at 5.6%. So basically, markets relieved that inflation hasn't shown signs of basically moving higher again. We have ticked slightly higher, but it was expected. So the market reaction to that is okay. Well, you know, it's nothing too drastic, so that's why we've seen the initial bidding risk move down in US dollar, because it's suggesting that the Fed are probably about right with where they're at with policy. I think you saw 2-year yields and 10-year yields both drop lower. I'm just double checking here. Yeah, 2-year yields back below 4%. Cryptos moved higher on the back of this. So you know, it's just been that typical sort of buy risk immediate reaction. Should we be re-ignoring the re-acceleration in core CPI back up to 5.6%, because basically last month was at 5.5%. This is a sign of price pressures getting embedded and growing stickier. Fed may well end hikes after May, but think cuts mere months after terminal are unlikely, given reluctance to let the genie out of the bottle for a second time. You know, are then markets drawing the wrong conclusions from today's print with that reversal in the core CPI? Remember, the core is arguably more important than the normal, and maybe that's why you've seen the initial bid, but now you're seeing a potential fade back lower. So that's basically been the initial market reaction. Let's see how they continue to digest that, and if they do go along with my initial thoughts on the reaction. What else can we look at? Let's have a quick wrap of Asia and Australia. Asian equities were mixed today. Japan set close with a fourth successive day of gains. Australia the ASX ended higher. Greater China mixed with Hang Seng lower. China's government bonds extended a rally, with 10-year yields dropping to 2.81%, 12 basis points off this year's peak. Yuan's share of trade finance doubled since the beginning of the Russian war. New Zealand house prices saw the largest quarterly fall in more than 15 years, but retail card spending rose in March, so pretty mixed out of New Zealand. In Europe, equity markets firmer. ECB's Villeroy appeared to harden his tone today. That was yesterday, warning the Eurozone is at risk of inflation getting entrenched above 2% and faces a long distance race to get it under control. In America today, the S&P 500 is witnessing its biggest pre-earnings rally since early 2009. As traders retain faith companies will deliver on profits. That's the expectation. GM is set to announce an investment in lithium mining to help ensure long-term supplies. American Airlines issues guidance for Q1, sees EPS of 0.01 to 0.05 from 0.00 to 0.05. Not much there. That's pretty much it, guys. Let's just have another run through of markets then and where we're at technically. As we can see here, crude just running, it's breaking last week's highs and now pushing a really important level. This has been a level on our charts now for some time. It's quite an obvious one as well, really. You got all the highs that were rejected at the start of 2023, plus earlier than that at the end of last year. You can see why that might have some sort of importance moving forward. Haven't been able to get through there for a little while, so could we face some resistance? In fact, you have seen that initial knockback, so that's a big one moving forward. Daily close above there and a firm one, and we could be on for a new rally to the upside for oil. Would that be good for CPI prices? Well, it would just, you know, tighten the core CPI that we just discussed. That excludes energy, don't forget, but the core headline CPI, maybe the month on month would start to just slowly tick higher again, but we'd have to see moves maybe into 90s or even 100 again for that to have a big impact, I would suggest. Dollar yen 132.97, so just below the 133. Like I said, initial selling of the US dollar being seen. Gold initial reaction has been again just boosted by the by yields falling and US dollar falling. So now it's back to retest that high from last week around 2025. Can we get through here? And are we still on for a run into that 2075 all-time high? They're the main questions to leave you with, and hopefully we'll get some answers from today's session. I'll see you all tomorrow, and take care, and bye for now.